my god, okay, the market has pulled back from its all-time highs all the way to the 100 moving average, a term which I already termed as a heavy correction pullback, which has happened once in September as well as once in November in my video of preparing for a market pullback 2 weeks ago. In fact, I called it out, or I kind of said it around here, and it actually really corrected itself way heavier than I expected. Okay, so for me, I expected it to correct maybe to around the 20 moving average or the 50 moving average, but it corrected all the way to the 100 moving average. And again, what's the moral of the story here is to always remember to take some profits off the table, okay, not get too greedy at the highs, okay, and watch my tutorials. Okay, but jokes aside, right, there's this question that all of us swing traders have on our minds right now that is like, oh my god, stock at state, can we even make swing trades in this kind of market conditions? It's so extremely difficult, right? It's so hard to swing trade because every day is just in the red, right? And in a sense that you are actually correct because again, in my market pullback video, right, my tutorial to teach people how to identify maybe the market tops, okay, potential market tops, and rebalance your portfolio, risk manage all your swing trades, right? I did mention that, if the market is actually in a downtrend or it is currently tanking or all in the red, right, most of the swing trades will tend to be a losing swing trade as well because you will more often than not get stopped out of your trade itself. But however, right, if you look at it from a longer term perspective, right, during these kind of falls and crashes, right, you do have opportunities to swing trade as well, but your swing trades will actually be very short-term in nature. And what do I mean by that? Okay, let's look again at the March crash, right, where everything just died, right? Okay, it was a straight line down, okay, and this is for your information, right, so the 1 hour time frame, right? But however, right, although you can see right here, right, it is a straight line crash down, right? Boom, 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 pretty straight line, right? But however, you look at the intermediaries, right, there is a lot of opportunities as well, but most of the opportunities are maybe 1 day to around 2 days. So your swing trade becomes very shorter term in nature. And that's the way it is, okay? You have to be very flexible as the market conditions change. So you see, right, there's a lot of gappers, but there's a lot of full green bars as well. See, out of the entire days, right, entire day, all the entire time, right, it was tanking, right, there was actually a good amount of green bars, okay? There was actually, okay, the initial space was the worst, okay, when it corrected to the 100 moving average, right? Then there's actually 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, there's a lot of intraday volatility movement, okay? And even after that, right, when it starts to rebound a little bit, right, a lot of green candles as well. That means, right, what does it mean by green candle? That means it might have opened low, then it closed up high again. So why did it still tank even when there's so many green candles, right? Most of the time, that means it gapped down. Okay, it gapped down next day, and swinging up again. Then next day, it closed up again, gaps down, swing up again, gaps down, and swings up again. So again, your job here as a swing trader, right? You need to identify where the support levels. Okay, so for example, right, for these areas, right, as a swing trade, okay, you can see that this area it broke below support, right? Then you know that the next support is at the 200 moving average. Okay, then from here, maybe you want to try to play an overreaction play, okay, which I also do teach in one of my tutorials as well. Go to my tutorial section, learn about overreaction play. So you look at the overall markets, right, when it closed down below the 200 moving average, right, then it closed bullishly above it, right? Maybe you want to take some positions on a few stocks that you're feeling, that might have potential to break up to the upside, and considering that the overall market conditions, right, there might be a bounce the next few days after. Okay, so and they did have a bounce the next few days after. Then, okay, it proceeds to crash all the way. Okay, once beneath that, right, then it's pretty. You have to really step on your toes as well as be very careful in trading as well, because overall market conditions really do have an effect on swing trading as well. And sometimes, as I said in my last video, right, okay, my last video or my top 3 swing trade stock video, right, I just said that sometimes no trade, right, is better than taking a trade. Okay, sometimes if it's really so red, right, like last week, right, it's like every day is a red day, right, and you can see that there's not even a little bit of bullish momentum, right. Sometimes you should maybe scale down a little bit, okay, don't size in as heavy as you normally would, okay, as you would in the bull market, okay, and just take trades very, very carefully. And if you think that it's not very ideal, okay, you might want to skip it for a little bit, okay, and that's for swing trading. Okay, long-term investing wise, it's a different story. You want to average in a lot more on your high conviction plays. For me, I averaged in a lot, okay, but that's another whole new different video. Okay, so let's talk a little bit more about what are we going to talk about today? And for those of you who do not know me, right, hi, I'm Stock Estate, okay, I'm ex-financial advisor, and I'm here, right, my mission here in this channel is to teach all of you, to make you guys an independent and investor as well as an independent swing trader, okay, both sides, okay, and here we focus on not a lot of the hype, okay, there's no hype here, you want to find hype, okay, you can go somewhere else, okay, the hype here is more of the learning. Okay, the hype here is learning. Okay, learning how to do the trades itself, learning how the thought process of how to be an intelligent trader and an intelligent investor with a lot of good risk management. Because for me, I think I hate losing money more than anything else. So if you're like me, okay, you don't want to lose money, okay, then maybe this channel is for you. So stick around. Okay, so let's talk a little bit more about last week's picks, right? So last week's picks, we have MVTA, API, as well as Beyond Meat. Okay, so 3 of them, right? Okay, what did I personally do throughout the entire week, right? Okay, I only added a little bit more of my positions on NVTA, and I got stopped out actually. And API, Beyond Meat, right? Beyond Meat, I added a little bit, but I got stopped out as well. So again, last week, right, was a little bit of quite a little small loss here and there, okay, but otherwise I didn't really size in and took a lot of swing trades because I was busy putting a lot of my capital, right, which I left over in my cash reserves, right, and putting it into my long-term investment. So last week was actually a long-term investment discount fire sale for me, okay, while I was scooping up a lot of shares of my favorite companies, okay, my favorite companies that I never thought would see at those prices again, man. Everything was stupid cheap, right? Like Square, a lot of the high-flying growth names, right? But I have a few which I really, really love, and if you're my long-term subscriber, right, you know which those companies are. And for MVTA, right, so let's just give a quick breakdown of what I did last few weeks, right? So again, look at the 1 hour time frame, right? Okay, so again, we were swing trading this company. Okay, we are looking at the 1 day time frame all the way here. You can see that okay, it broke down all the way, right? Okay, all the way down here, right? It was breaking down. Okay, and around here, as I meant to say, maybe you can take like a small little position around here, right? We want to take a position around here, maybe swing it to the upside. And I do say, to go to the 1 hour time frame to get a better gauge of what's going on. Okay, so again, right, this is the point which I was talking about a lot. Okay, so let me clear the drawings. Okay, so around here, right, this was the part where I said, maybe we can if it closes above this, right, and it consolidates, okay, and above, okay, a very small pullback above the 20 moving average, right, then you might want to take a position. So again, what happens was, right, I took a position around here, okay, around here. Okay, around here, right? So this position around here, because, okay, what happens was, okay, I was waiting for the breakout above the 20 moving average to show a up sign. Then it went down again. Okay, at here, right, I was like, okay, sure. Let's try and take a position to swing it maybe to the potential upside. Okay, maybe to the upside again. Okay, and I set my stop loss, okay, around here. Set a stop loss around here. Okay, the previous swing low. Okay, and I took a position here, right here. Okay, and it could either break to the upside, right, or it could break to the downside. And again, the overall market conditions pulled down this entire company in this stock, right, and I exited my trade, okay, around here according to my stop loss, and it proceeded to go down lower. So you see, right, again, right, what I do always preach is, take your losses, quickly, okay, cut your losses quickly, okay, and bring the capital, okay, bring to another trade that you think they have higher potential or better potential, okay, and in this case, right, I got stopped out because the overall market conditions just wasn't in our favor, okay, and really couldn't be helped because we did everything right. We followed a trade plan, okay, over here, and we want to have there's quite a high risk and high reward to the risk that we are taking, because again, we look at the 1 day time frame, right? Okay, if we took a position around here, right? Okay, so much potential back to the resistance level around $49, okay, from 39 to all the way to 49. There's so much upside, but again, it broke down even further down, right, to the downside, which, wow, I never thought I'll see inventory at this level. So right now it's hovering, right? It's hovering at the support level over here. Okay, again, it's hovering around this support level over here. Okay, let's see, somewhere around here, okay. Okay, so when you draw support resistance levels, right, you want to have as many touch points as possible. 1, 2, 3. You can see this is the area where most candles has been touching, right? So if you want to, again, you want to push a little bit more, okay, around here. Okay, around the $32, $31 level is a support level, which I think this is one of the lowest it can go. So again, if you can get any shares around this level, right, it's super oversold stock, right? Okay, this is maybe a good place, for you. Okay, even if you want to draw the support level a bit lower, maybe around $29. Okay, again, this is a very strong support level that if you really like this company as a long-term investment, you can actually think of adding some positions in. So that's for NVTA. API, similar story. Okay, API is another similar story. You can see the annotation that I had from last week. Okay, I'm just going to clear those. Okay, it's going to be confusing. Okay, and let's take a look, right? And let me just drag down all the indicators that I use. Okay, so here, okay, here, right? Okay, again, from here, last week, right, was around here. Okay, I was like, if it breaks above and consolidates above, right, I'll take a position here. So we did take a position here. Okay, and let's see, we did take a position over here. If we had to, we would have taken a position over here, right? This area over here. Ta-da. Okay, and what happened was, again, okay, the stop loss, right, will be below this level. Okay, maybe the previous below the previous swing low around. Okay, see the moving average over here. Okay, maybe if it breaks down towards the lower moving average, right, we set a stop loss around here. Okay, so it did broke down to the further downside. Okay, then it just consolidated around all the way. Okay, and it didn't move much, honestly, from where we got stopped out from. So it's just on a very, very downtrend. Okay, so unless it's shows signs of an uptrend, right, where it breaks above, consolidates above again, right? And what do I mean by that? Okay, that means it breaks above, and it's starting to break above a little bit one more time. Okay, and it consolidates above the 20 moving average, right? And it starts to show a lot of pressure of not wanting to break below the 20 moving average. Then maybe you want to take another position again to swing it to the further upside. Okay, and you don't know what I'm talking about, the 1 hour time frame, right? And how to use 1 hour time frame, how to use the daily time frame, right? Okay, go to my previous swing trade video, which is this one. Okay, top 3 swing trade stocks video. Okay, and go and look at it, listen to some of my analogies. Okay, so the good thing about this, right? Although all these are kind of time sensitive, where when the video is like for the week itself and it's over, right? And it's kind of not relevant, but however, I do drop a lot of valuable tips, okay, here and there, how I analyze, right? And so if you're really, really bored, right, you can maybe just put it on times 1.5 times 2 speed, right? And just glance through a little bit, okay, listen to it a little bit, and sometimes you might catch some of the stuff that I say. Okay, so yeah, that's it. So API, same thing as well. Beyond Meat, same story as well, okay, same story. Okay, so again, right, Beyond Meat was a crazy ride, okay, basically, okay, you can see from the 1 hour time frame, right, so many spikes up, then down again, spikes up to the down again. So again, if you manage to catch some of these spikes, right, then good for you, actually. Then you might even actually get some profits here and there along the way, because there's a lot of profits to be made if you're able to catch the spikes. So again, from this area onwards, right, you might have taken a position, okay, around here, right? Taking a position around here, you wait for the consolidation. So again, this stock is very funny because it is just fluctuating in and out of the 20 moving average. Okay, so again, depending on when you wanted to take a position, right, you might be able to swing up to take a small profit down, up and down a little bit more. But basically, this stock didn't really move much at all. Okay, so you probably would have been stopped out, or if your stop loss is a little bit wider, okay, you would have not taken a loss. Okay, you're still holding the shares. Okay, and also Beyond Meat was a very strong company. It's a forerunner in the plant-based meat industry, right? So that in itself, right, serves as a pretty good long-term play. So if you want to, hold some shares of this company, right, it's probably perfectly fine to do so, especially in this kind of downturn market. Okay, but as you can see, there's a lot of mini spikes up and down. Okay, and if you really want to do a little bit of intraday day trading swings, right, you can as well. Okay, and sometimes I also do a little bit of day trading once in a while, but it's not really my thing. But because I only have like a couple hours before I actually have to go sleep for the next day, right? So because of my time zone over here. But however, sometimes for maybe around 10:45 to around 11:30 of US market open, right, I might actually do some swing trades here and there if I see the opportunity. So again, if you are quite good at making snapshot decisions, right, okay, this might be good for you as well. So my tutorials also applies for day trading, so you can check those out as well. So now let's talk a little bit more about the top 3 swing trade stocks for this coming week. Okay, and this coming week, right, let's talk a little bit more about revising the LATE format. Okay, we must have a streak, looking at respecting the long-term trend, looking at the area of value, okay, the trigger to enter, as well as my exit strategy. Okay, you must craft all of these very, very carefully. And this coming week, right, I'm going to talk a little bit more about these top 3 swing trade stocks for this coming week, right? And these 3 stocks have very, very interesting characteristics. And why do I choose them? Okay, stick around. I think you really like what I have to say, because these 3 stocks are actually in the gambling space. Okay, the gambling space. And the gambling space, right, has been, here for long time to come, and has also been a very, very hot sector, especially with the sports betting industry like DraftKings, Golden Nugget Gaming. Okay, it's been one of the few very, very hot sectors, along with EVs, clean energy. Okay, it's just there. And what's the most interesting thing that I noticed about in this entire trend these days, right, is that these 3 companies, right, have been especially very, very resistant, right, throughout this entire downturn. So what do I mean by that? Okay, while many companies, right, are getting hit, okay, 30%, 40%, okay, just give me any one of those high growth names, right, okay, I can tell you that they have dipped more than 20% this week, definitely, okay. Even very, very strong big cap companies, right, like Tesla, right, down I think 30% from its highs. You can fact check me on that, but something around that level. Okay, definitely around 20%, more than 20% from its all-time highs, right? So again, a lot of the companies got hammered. Okay, hammered. Okay, people are bleeding out their buttholes, right? Yeah, from this entire week ahead, right? But these 3 companies, right, are holding their grounds very well. Okay, and on the first few days, right, last few weeks of so there's around 10 days of ass bleeding, right? But the first 5 days they held up pretty well and they were actually green. Okay, so the first one let's talk about is actually EVRI. Okay, and I was actually looking at this company, right? I was thinking like, it's pretty good actually. So it's a company that is strong defensive company, right, against all these downturns. And the first stock is actually EVRI stock. Okay, every holdings. Okay, and every holdings, right, you can see that from here, right, it's still a trending move. Okay, bear in mind, okay, this company, right, is in a trending move. That means it's following a trend. Okay, right above the 50 moving average quite strongly. You compare that to the Nasdaq. Okay, the Nasdaq, what happened? Okay, this is the March crash, right? Okay, and over here, okay, is in a huge downtrend. Okay, breaking past support levels. Wow. You can see difference. Okay, again, it's just retracting very little bit. Okay, towards the 50 moving average. Not as bad as the Nasdaq right here. Okay, this is a really, really hard correction. Okay, people might say that it's only been 10%, right? Definitely, it could drop more. But again, this is why I call it a heavy-sized correction. Okay, it's not a crash by any means. Again, when it crashes, that's when it breaks past the 100 moving average, and that is where we have to be a little bit more worried about. Okay, and my analysis for now for the overall markets, right, I can see that it will have a slight bounce next week. Again, back to this level over here. Okay, let's take a look. Let's then bring my doodle, right? My favorite doodle. Okay, so again, I foresee a nice little bounce, okay, above this area. Okay, but I feel that the 50 moving average, right, will be a strong resistance area for it to break past. Okay, every time it reaches this level, right, it will tend to get rejected off. Okay, I think we can see some consolidation around this area for very, very long periods of time. Okay, a bounce between the 50 moving average and the 100 moving average. Okay, because every time it dips back down below the 100 moving average, right, I think people will be like, this is a pretty good deal, I want to buy it up. But again, people are scared to buy above this level. So again, I think it will consolidate around this level for quite some time. Okay, and that's basically just me speculating. Okay, but this is my gut feeling right now. Okay, but it can always go to both sides, but we always have to be prepared either way. So EVRI, right, you can see that it has been very, very strong against the trend. Okay, well, the first part, right, where the Nasdaq was selling off, right, all the way down here, right, and the overall markets was selling off, right, EVRI was on the green, mind you. Okay, it was green. Okay, it was slowly edging upwards, slowly. Okay, only the last few trading days, right, it was down a little bit on the last few days. Only the last 2 days, right, it was down. That means Thursday and Friday it was down. Imagine being up in a sense, green, semi-green, right, for the whole last week. And Monday and Tuesday, where there was so much bleeding, right? And only it manages to crack a little bit on Thursday and Friday. And when it cracked on Friday, right, like everything else in the market, it rebounded all the way back above the 50 moving average, which it respects pretty heavily. Okay, every time it touches here, right, it tends to respect. Okay, it trades a little bit above it, touches here, respecting it. So again, this is a trending play. So it's very, very interesting to find trending plays, right, in this kind of downbeaten market. And this company is also in the gambling industry. Okay, now let's take a look at Scientific Games Corporation, SGMS. Okay, this company is also in the gambling space as well. Okay, the gambling space. And what can you see here? Very similar moves. Okay, the company is actually trading green. Okay, and only the last few days it cracked a little bit below, the 50 moving average and supporting itself very strongly over there. And you can see like a trend. Okay, the gambling space is actually very, very resilient in a sense against this market downturn. So it is a space where you can actually explore, to play some trending plays in the midst of this entire downtrending market. Okay, so again, if you play wedge plays and some other plays, right, that is moving with the market, right, most of the time you will follow the market and you will get stopped out of the trades, okay, that you're making. But however, if you find stocks that are defying the market conditions, right, and rallying against the market conditions, right, then those companies, right, you have a higher chance rate, right, of getting a good swing trade itself. And last stock I'm going to talk about is actually IGT, which is International Gaming Technology. Again, this is also another gaming company, and you can see very strong. Okay, I was actually thinking that this company might actually break out, okay, along with the entire gaming industry, right? Because you can see there's this nice little let's see. There's this nice little ascending triangle. So basically this ascending triangle, right, I was waiting, I was thinking maybe we can get like a breakout, right? So it will trade around here until somewhere, then it will break out, because a lot of buying pressure around here will actually break out. But last week was really quite heavy. Okay, it broke down below here. Friday it was even worse, but quickly reversed back up again, back into the wedge itself. So right now, right, this company is at a good, nice little area over here. Okay, maybe this area we can change it a little bit more around here. Yes, so this wedge area, right, is a little bit more tighter now. Okay, it's a little bit more tighter. It has to consolidate for a little bit more. But again, right, this kind of place, we can play the swings around this area. So what do I mean by that? Okay, you can play the swings around this area. So what happens, right? You can play one swing up, you can play one swing down, you can play one swing up, play one swing down. Then when it gets too tight, right, it starts to consolidate a little bit too tightly until you think that there's no point swinging it, right? Then you might want to accumulate shares for the breakout play. So that's why wedge plays and ascending triangle plays are pretty fun as well. So now, how do we play all these kind of plays again? So firstly, right, again, you can play this as a swing play or in the wedge play. That means within the wedge play. So again, you can see, right, most of these companies have a similar pattern. So I won't go too much into detail because this video is going to be around 40 minutes long. Okay, but basically, right, you can see around here, there's this nice little range that is normally trading under, right, around this area. And what can you see from here is respecting the 20 moving average for a while, then now it's respecting the 50 moving average. So what can we do? Okay, what can we do, right, is the moving average will continue to move up here. Okay, what can we do is we can play the swings, okay, up here, okay, down again. And because every time it reaches this high over here, right, okay, it tends to pull back a little bit more. So again, you can play the swings up, down, okay, until it gets too tight. So again, this one swing over here, right, could be a potential one-liner. So you just get one profits up here, wait for it to come down, buy the dips, the lows over here when it gets supported by the 50 moving average, and swing up again, down, swing up again, and until, right, the risk to reward doesn't really make sense, right, where each swing becomes so small, right, then you might want to accumulate shares to break out, to play for the breakout. So again, for here, right, where do we set our stop losses? Okay, stop losses you can set below the previous swing low or some distance below the 50 moving average. Okay, again, right, sometimes extreme conditions can occur where you can see in this area over here, right, this candle over here, insane, okay, dip down, reverse back immediately. Wow, insane hammer candle over here, and you might get stopped out. But when this kind of thing happens, right, the best advice that I'll give myself and what I would do, right, is don't brood over too much about it, because sometimes the markets just have huge swings like that is very unpredictable, especially in these kind of markets. So when it swings down all the way and closes back up again, okay, it's okay. Missed out on a little bit of profits, right, a little bit of stop losses is okay. Okay, enter back again at the area of value. Okay, the area of value is what? Near the 20 or near the 50 moving average. Anywhere around here, anywhere around the 50 moving average, right? Around here, right? Okay, you can see over here is the area of value. AOV, area of value. area of value. Okay, this is my trading plan here. Those of you who are new, right, can reference this to make your own trade plan. Okay, so this is what I use for a trade plan. Always have a trade plan. If not, you will get destroyed, okay, in the markets, because it's very fair. You don't do your due diligence, you don't do your trade plans, you are going to get destroyed. So area of values are in these areas, these small areas over here. Okay, profit taking level, okay, near the resistance level. Okay, and if you want to play a breakout when it comes to around here, right, this breakout area over here, this area, right, you can accumulate shares, okay, set stop loss right below the 20 moving average, I mean the 50 moving average, and set a trailing stop loss, TSL, for the further upside. Okay, and this plays are pretty similar. Same thing for SGMS. Okay, I think it's the same play itself. I don't repeat myself again. Okay, it is roughly the same for the two other stocks. Okay, it just depends on extra due diligence that you want to do. Okay, you can go read up on its fundamentals, read up for extra catalysts. Okay, and it's up to you, to do the work and pick one or two, right, that you really like for whatever reason. Maybe the chart patterns develops a little bit nicer than the others. Okay, then you want to play that, or the risk to reward ratio, you feel that for a particular one, right, SGMS or IGT. Okay, which one is a little bit nicer, right? You feel, oh, this is a little bit nicer, I'll play this one. So again, I can give you the picks, right? These are the best picks and my thesis behind it. And you are the ones that's doing the actual picking. All right, and how about I throw in an extra, one company, right? It's called Boyd Gaming Corporation, also in the gaming industry. But this company is in a super strong trend right here, okay? Respecting the 20 moving average, okay? So any questions, right, if you wish to, okay, I wish to end the video right here, okay, because I don't want this video to be too long, okay. Any questions you have, okay, you can leave down in the comment sections below. I'll try my best to answer them as much as I can. And it's up to you, again, as I said just now, right, to craft your own trade plan, craft your own exit strategy, okay, and be a better investor. And that's the actual main motivation or the main mission of this channel itself. And that's it for today's video. Okay, I hope you guys enjoyed this long video, and this video that I like to do every single week. Okay, and I don't release that often because I feel that I want to value pack every single week, right? Week's value, right, in one video. Okay, updates and everything. Okay, and so that you can learn a lot. Okay, and you can make your own decisions on the field itself, because let's face it, right? If you can rely on a certain YouTuber or a certain source for all your information, and you rely on them too much, right? What if suddenly they stop posting, right? What if they suddenly they stop posting, or they don't want to reply to you or something? Then you'll be stunned there. Oh my God, what do I do? I'm back holding something. Should I sell? Should I buy? Should I sell? Okay, you don't want that. Okay, you want to be control of your own money, in control of your own finances, right? So again, I'm posting once a week consistently, okay, because honestly, that's, I think, almost a lot, and it takes a lot of work to do all these videos as well, researching and everything, okay. During the weekends, weekdays, I do have my own work as well, so I do try my best to, maybe release a few tutorials in the weekdays, but my channel will be geared towards, tutorial value, teaching you. And for you have to make the on-the-ground decision, right? Whether to get stopped out, cut your losses, write your winners, okay, and review yourself every single week, okay. And with the updates and everything, you write down in your journal, okay, whether I did something correct, I did something wrong, and again, you will improve better as an investor, as a trader. All right, I shall see you guys in the next video. Good luck and good trading. Stock and stay out.